This Saturday at 7 a.m. and 2 p.m. Learn more at scwealthadvisors.com.
Now, from the Signature Bank Studios. If you're looking for the latest news, insight into what it means, and the sharpest opinion, there's only one station in Chicago where you can turn, and it's this one. We're AM 560. The Answer.
Top of the morning, Dan Proft here, and John Furner is the CEO of Walmart. He went on with Clinton Foundation donor Zero. You know him as George Stephanopoulos. Trump's still sore at Stephanopoulos' treatment of VP Vance, but Vance handled himself well. It's all good. I mean, you just have to know what you're dealing with. Why even bother with George Stephanopoulos? It's like me talking to the Tribune. I don't, because what's the point? Fortunately, like Trump and Vance, I have my own platform. I don't need to indulge those creatures of the D.C. press corps doing the bidding of the forces of stagnation and darkness. Anyway, back to Walmart CEO John Furner. He did indulge the forces of stagnation and darkness by appearing on Stephanopoulos' show, but it was funny because he said I had to correct the record. What are we going to do? What's Thanksgiving dinner going to look like with these rising prices? Well, they're not rising, at least not at Walmart. Furner was happy to inform Georgie.
I want to talk about a couple things with the Thanksgiving basket. First, we started putting together this idea of having the entire basket easy to purchase, easy to assemble back in 2022. And this year, we will have the best prices on this basket we've had since the program started. We're down about 25% from last year, down about $14 for the basket, which puts us in a position where this basket is just under $4 a person when serving 10 people. Mm-hmm. So we have a great basket that has a mix of our great brands, like Butterball turkeys. Our turkey prices, George, are all the way back to what they were in 2019 at 97 cents a pound. So we're really excited about the progress. I was really impressed when the team brought me this. It was better than I expected. So we're looking forward to a great holiday season, and we want to help people celebrate any way they want and do it at a great Walmart price.
How about that? If I had 9 friends, I'd go get that Walmart Thanksgiving food turkey basket, and $4 a head. That's pretty good. Jonathan Hoenig joins us now. He is the founding member of the Capitalist Pig Hedge Fund, which is why they call him the Capitalist Pig. He's also a Fox News contributor and co-publisher of Can You Really Love a Dog? Leonard Peikoff and Ayn Rand on pets. Jonathan, thanks for joining us. Always appreciate it.
Good morning, Dan. Great to be with you.
Hey, how about that? I know that people are still feeling the price hikes at the grocery store, but at least for Thanksgiving dinner at Walmart, some good news.
Yeah, Walmart's getting out ahead of it, and they're smart because they know, Dan, people have been feeling higher prices. Tax Foundation had an interesting statistic out this month. The average household is feeling about $1,300 a year from the tariffs. So Walmart's getting out ahead of it, and it almost reminds me a little bit of what Costco does with the hot dogs. Like they keep the hot dog at, $1.50 or $1.25. So, I applaud Walmart. Companies are doing the best they can to keep prices down, but unfortunately, they're paying higher prices for all those imported goods.
The purchasing power, not to mention, the purchasing power of the dollar continues to get diluted because of profligate spending. How are you dealing with the, now in its third week, the quote-unquote government shutdown? Are you okay?
Yeah, I'm doing okay. And interestingly, Wall Street's doing very well. Apple hit a new all-time high yesterday. The Dow is just off of its all-time high. And the fact is that the economy grows from Wall Street, not from Washington, D.C. So the fact that Washington shut down, but when great American companies start shutting down, then I'll start to worry. But they soldier on despite all the challenges and all the heartaches and all the difficulties. So, never bet against this great country, Dan. We've talked about that time and time again. And certainly the government shutting down, it's frustrating, I know, for those many government workers, but for the American economy, it soldiers on.
Now, I just want to revisit this. I've visited it with experts in the arena like yourself many times over the last couple of years, but just in terms of kicking the tires of this market that just continues to go up at a 45-degree angle, something that can't go on forever won't kind of thing. The other prices that are coming down are prices for commercial real estate. and they're coming down precipitously, not in a good way, in terms of ROI, in terms of commercial real estate holders returning the keys to the bank, those sorts of things, selling for pennies on the dollar that they were bought for, some of these buildings just a few years earlier. And one wonders, as some wags have suggested, is there a commercial real estate crash yet to come that could drag the stock market down with it, and that maybe banks are hiding effectively at present? What is your sense of that?
Well, Dan, I mean, just having been in markets for over 25 years, right now I'm channeling my old high school hockey coach, Coach Schager, who once said that a good defense is your best offense. I think your point is very well taken. Stocks are up, but they're not cheap by any means. They're trading at very historically high valuations. And you're right. I mean, going back even to the pandemic era with those ultra low interest rates, there was a lot of real estate bought at very, very high prices. The chickens could be coming home to roost. So I'm advising my clients over at capitalismpig.com is a truly diversified portfolio. Yes, some stocks, but also bonds, cash, commodities. Gold is just off of its all-time high, but really build a durable portfolio because, Dana, no matter whether you're a fan of the president or not, we're going to see volatility. I mean, it's inherent in the game. And we haven't seen too much of it so far during President Trump's first term. But I think in 2026, you'll probably see a lot more to come, especially as unrest in the Middle East. I mean, the peace deal lasted, all of 25 minutes maybe? I don't even know if it lasted that long. So there's going to be more geopolitical unrest. And again, I think it's a great opportunity to get those credit card bills paid down, get a 6 months worth of living expenses in the bank. If you can just accomplish that, Dan, you're better off than 95% of most Americans.
Chickens coming home to roost. Very good Jeremiah Wright impersonation that you do. Now, on the flip side of that, what I just said about commercial real estate, we saw, I think CNBC was reporting this morning, 81% increase in individuals and entities interested in refinancing as interest rates have come down a little bit, and so that could be good news both for homeowners as well as for corporate entities that need to relieve the cost of the debt they're holding.
And the government itself, yeah, Dan. I mean, it's almost a good news, bad news thing. I mean, we've seen the stock market go up, but at the same time, we're seeing interest rates go down and oil prices go down. Now, there's no perfect system, but oftentimes those tend to be correlated with a slowing economy. And we know that there's some indications on the job front that the job market is slowing as well. That's been quite tight for quite some time. So, the winds are shifting, Dan. I think the era of the AI play is probably nearing its not ninth inning, but maybe seventh or eighth inning. We're seeing still a lot of interest in that. And, it's very much like the 1990s. I mean, back then we knew that the internet was going to change our lives. And you're seeing that very much with corporations now. They're integrating this new technology. Whether or not it's going to be profitable, who will be the winners and losers, that's to be determined, which is why, again, I think it was a great time to kind of batten down the hatches, if you will, be prepared for some volatility, but don't jump out of great growth companies and great investment opportunities in still the freest country on earth.
You're a libertarian, so you're a hard money guy. So are you also suggesting, stick with gold and silver for now, too?
Not just gold and silver, Dan, but actually, and again, you want to do your own personal due diligence, talk with a financial advisor, but over at Capital Pig, actually, we've got our customers in platinum. Ticker symbol on that one is PPLT. Again, do your own due diligence. But, platinum, if it was going to reach its all-time high, still has to about double from where it is. It hasn't even reached its all-time high. And it's got a lot of uses, Dan, in catalytic converters. What is that? Those are cars that are not EVs. So one way in which Washington is meeting Wall Street is that the secession of all those EV giveaways has put a little bit of a bid in the price of platinum and palladium, because those are used in good old-fashioned gas-guzzling catalytic converter or having cars. So PPLT is one I like. Again, do your own due diligence, but in terms of the long-term returns, I think you could make some money in platinum.
Well, not to mention all the catalytic converters that are stolen in the city of Chicago, so that helps to bump up the price too, right?
Yeah,
sure.
Yeah, they're valuable. They really are.
Clearly. So were you at the Economic Club of Chicago yesterday for the big J.B. Pritzker interview? You're a potentate in town. Did you attend that?
No, I was not at the Economic Club, but I seem to see Governor Pritzker everywhere these days. He's really making a run for it. This is going to be an interesting election season as Illinois governor takes center stage. Yeah,
when he sits around the state, he literally sits around the state. So all the rent seekers were there. I'm sorry you weren't, but this is what J.B. Pritzker had to say, though, trying to distinguish himself from Brandon Johnson. We finally found a difference of opinion between the two of them. We know it's not with respect to law enforcement or border security, but it is with respect to the corporate head tax that BLM Brandon proposed to raise $100 million to pay off violence interrupters and storefront preachers to help him get reelected. I don't think he put it quite that way, but that's what he's doing. This is what Pritzker said about it.
I am absolutely foursquare opposed to a head tax for the city of Chicago.
That message resonating with business leaders.
It penalizes the very thing that we want, which is we want more employment in the city of Chicago. And it makes it very hard to attract companies from outside of Chicago to come into Chicago and harder for companies that are in Chicago to stay.
You know, I'm real impressed with his understanding of his Economics 101 understanding, and that was Craig Wall reporting for ABC7, by the way, credit where credit's due. So that's real nice. But then I guess my follow-up would be, wait, aren't you the guy who wanted to graduate the state income tax? And don't we want more people working, and so you lower the cost of working to generate more work, and thus productivity, thus jobs? I mean, so doesn't his head tax argument apply to other things where he doesn't use the same logic?
Of course, all of those taxes. And it's tragic, Dan, how unfriendly certainly the state of Illinois, and in particular the city of Chicago, has become to those businesses, big and small. You know, I mean, a lot of restaurants in my neighborhood, you know, these mom and pop joints, Korean, Thai, you know, like wonderful family-owned businesses. One day they're there, now one day they're not. And you know what? For them, for your listeners, I know a lot of small business people who are listeners, an extra 1%, 2%, that might be their entire profit margin for that period, for that quarter. So, Pritzker's got to get some religion here. If he wants to bring businesses back, he needs to make this city and this country, this state, much more hospitable to business, because he's right. They're the ones that create the wealth. They're the ones that create the jobs, not government. It's the private businesses that does it, and that's what we need more of.
Well, also, too, I mean, to be honest, right, the corporate head tax would apply to businesses with more than 100 employees. So for most businesses in the city of Chicago and elsewhere, I mean, obviously I'm an opponent of it, but for most businesses in Chicago or elsewhere, what would really be meaningful is tax relief at the state level in terms of corporate, individual, property taxes. Reforming those taxes structurally downward is the only way they're going to, see real benefit.
I mean, tax something less, you get more of it. Tax something more, you get less of it. You're taxing employment. Don't we want more employment? I mean, every new person you employ, well, there's another tax to pay. I mean, it seems just about the most backward idea of raising revenue I can imagine, taxing exactly what you're trying to promote, more jobs in this state and more jobs in the city.
Jonathan Hoenig is the founding member of the Capitalist Pig Hedge Fund, Fox News contributor, publisher of Can You Really Love a Dog? Leonard Peikoff and Ayn Rand on Pets. Jonathan Hoenig, thanks as always.
Great to be with you, Dan. Thank you.
Thanks for joining us, and he did on the Turnkey.Pro answer line.
There's only one radio show in Chicago talking about today's biggest stories and telling you what they really mean. That show is this one, Chicago's Morning Answer on AM 560, The Answer.
Signature Bank is Chicago's fastest growing independently owned business bank. It's a bank where relationships still matter. I'm Dan Proft, and I know this because Signature Bank is my business bank.
Hi, I'm Tony Dreyfus, founder and president of Metropolis Coffee Company and a proud new customer of Signature Bank. We're a 19-year-old specialty coffee roaster located